Hey everybody, welcome back to the channel. This is going to be week number 6 for our trading watch list. This watch list is applicable for August 7th to August 11th. In today's video, I'm going to start off with all the earnings that are coming up along with couple events. Then we are going to go over the recap for SOFI, Tesla and Cloudflare trade. And then I'm going to share with you 2 more trade ideas for the upcoming week. If you have been enjoying these trade videos from the last couple weeks, I highly recommend that you subscribe to the channel, follow me on Twitter for latest updates, and sign up for my free newsletter because I go into much more in depth and I'm going to show it to you when we go to Tesla. So without further ado, let's dive in. Last week was a major earnings week, especially with Apple, Amazon reporting earnings. Apple is down almost 6.5%. Amazon is up more than 7.62%. We also got a major downgrade from Fitch, and somehow the market has brushed it off, and we'll see how that impacts in the long term. Next week, we have the core inflation data coming in. We are expecting a core inflation of which was 4.8. We are expecting a 4.7. For the earnings standpoint, it's going to be a pretty light week as opposed to the last 2-3 weeks of major earnings that we have had. We are seeing Palantir reporting earnings on Monday after close. Then you have Lucid and Skyworks. Before Tuesday open, you'll have UPS, Lilly and Datadog. After close, we have Rivian. On Wednesday before open, we'll have Roblox. After close, Walt Disney, Trade Desk. Then Thursday, we have the Chinese company Alibaba Group. So a pretty light week from the earnings perspective. All right, let's kick it off with SOFI. We saw SOFI reporting earnings prior to Monday close, and unfortunately, SOFI ended the week below the 999 mark. SOFI had a major run after earnings, and we saw this big run up right after the Monday earnings. However, SOFI has lost all that run up and is now below its 20-day moving average. It's below its 21-day moving average. And we also see the MACD curling downwards, which is signaling that there will be more downward pressure on SOFI. And especially in the last 3 trading days, the volume just dropped drastically. The average volume for SOFI on a daily basis is about 88.84. It was half of 42.56. Now, if you have been following me on Twitter, you might have seen this post on July 31st when I posted after the earnings. When we had this major run up, we wanted to see if SOFI is going to fill this gap over here, and that's exactly what they did. On the selling pressure, they pretty much could not sustain that major run up. Now, as I mentioned in the last video, because we missed the chance to open a position prior to the earnings, and post earnings SOFI stock ran up so much and we had this major sell off the following day, all the options premium for the end of the week saw a major IV crush and the premiums had completely disappeared, and there was really no major ROI you would have got if you would have opened a cash secured put. So I did not take the trade of SOFI. The second trade was for Tesla, where we are running our wheel strategy, and since we already acquired the 100 shares, we are running covered calls on it. Now, there is a lesson that I'm going to tell you that I have learned again, and this is something that you might also want to keep in mind when you are running strategies like these. When the stock, especially Tesla stock, at the money or near the money, the premiums are pretty substantial. On Monday, Tesla stock was hovering around the $269 mark, and the premiums at that point of time was around the $400 mark. What ended up happening is, because the Tesla stock was going up a lot, I decided to not open a covered call on Monday or to wait to see if Tesla can cross the $270 mark, and then I would be able to open a covered call to get more profit from the original investment as well as get more premium for selling at the money. Now, as you can see, what ended up happening, because I did not follow my own rules of not opening a covered call as soon as possible, Tesla stock started declining, and because of this major decline where stock started going below to $253, 200, it even touched around the 50-day moving average of $252. Because of the IV crush, the premiums really got crushed. I ended up opening a covered call on August 4th, which was Thursday, and this is not good. If you're running a weekly covered call from Monday to Friday, if you open something on Thursday, most likely you're not going to get the premium. I only got a premium of $62 for running a covered call, whereas if I would have opened on Monday, I would have got $400+ on the same trade. So long story short, this is the lesson. If you're running a covered call which is expiring in 5 days, you need to give your contract enough time so that you can enjoy that premium. Now, if you have not subscribed to my newsletter yet, I highly recommend that you subscribe it, because in each of the week I provide the complete details on the trade strategy. I go into much more in depth on why I choose a particular strike price and what is the reason and how the trade generally evolves. Much more technical analysis is done on this one, much more explanation is done. And if you like what I write and And if you want to support me on my writing journey, you can subscribe to the paid version as well. The third trade plan was on Cloudflare, ticker symbol NET. Here is the full analysis on Twitter. Make sure you follow so you can read up this entire Twitter thread. I will also be doing a recap on the earnings. This is a trade that we took on net as planned, and we got a very good premium. We got $1.50, which was $150 on an investment of only $5,900. Our first trade will be the continuation on Tesla, where we are continuing to sell covered calls until we can get rid of the stocks that we have. Currently, Tesla stock is trading around the $253 mark, and our cost basis is $257 on Tesla. So if we look at selling at 257.5, we will get about $450, and we can reduce our cost basis to about 253. And that is exactly my plan is. The next trade idea will be on Intel. So yes, we are coming back to Intel because Intel is again a very range bound stock, and to run covered calls or to run wheel strategy, you need good range bound stocks. I'm going to start off with a weekly chart on Intel, and you can see that the 3684 seems to be the absolute resistance for Intel at this point of time. It has been rejected 4 times since the middle of June that Intel has not been able to break that resistance. So if we look at 3684 and 3376 as a range, this is where you can trade Intel on a weekly basis until we see a major breakout on Intel. The major breakouts generally happens because of some kind of an event or news. Earnings have already passed. Ex-dividend date has already passed, but chances are only if there is some news that comes out, you can see a breakout. Now, if this is the range that we are going to trade Intel upon, 34 or 34.5. So 34.5 has about 3,500 open interest with a delta of 32. So it is right in that range where you get a decent amount of premium. So if we sell a put on 34.5, your net return for the week will be about 0.98. And if you end up acquiring that share, your cost basis will drop to 34 and 16. The next trade that I'm looking at is AMD. Now on the weekly, AMD seems to have hit a resistance of 132, which is also, by the way, 131 is a high from March of 2022, which AMD has not been able to break, even though we had a very good earnings report. And seems like AMD is finding a $114 range as a support level. Now we also saw AMD dipping below the moving averages, especially the 50-day and the 20-day moving average. However, it closed Friday in green, and it is now above its 20-day moving average and exponential 30-day moving average, which is very important for us. Also on the MACD, it's a little difficult to see, but it is curling in a positive direction. I would be targeting the $112 cash secured put, which has a delta of 27 and it has about 2,000 contracts. The premiums are $1.13, and that is about a 1% return for the week. And our effective cost basis would be about 111. We also saw a couple positive articles about AMD, especially Morgan Stanley says it's a buying opportunity for AMD. I'm long on AMD both in my long-term portfolio as well on a trading standpoint, and AMD is one of the most liquid stocks, especially from an options perspective. These are the two trade ideas that I have. Both are in the semiconductor space. One is Intel, which is very range bound, and you have AMD that I want to get in and run a wheel strategy, and we'll continue to trade Tesla on a wheel strategy as well. These setups are perfect for people who work 9 to 5 and they cannot sit in front of a monitor and watch the price action on an hourly basis. So hopefully you enjoyed today's session. Make sure you hit the like, click on subscribe, and ring the bell notification. And by the way, also share it with your friends and family so they can take advantages of these weekly setups. And I will see you next week, investor family. But don't forget to invest for tomorrow.